Good evening, everyone. Time for another silver update. Well, congratulations to all the longs. We did get the expected breakout today. It was a strong breakout. As I said yesterday, I was hoping for a $1 or $2 move on the breakout. We got approximately a $1 move. You can see from about 31.50 roughly is the bottom to, we actually went over 31.70, I think was the high. So that's a pretty strong breakout. I've charted the volume here, and you can see that we got a spike above this downtrend line in the volume. As the price has been increasing, the volume has been decreasing. But today on the breakout, we got a pretty good spike. So that's a confirmation. And it looks healthy. It looks like it's the real deal. We'll have to wait and see if we follow through tomorrow. I expect that we probably will. I think at some point we're going to pull back to this line here. It's at 31.20 roughly. That would be normal for us to pull back. Ideally, it will become support, and then the next leg up will bounce off it and move higher. We don't know how high we're going to move before we come back down, and we won't necessarily come back down at all. Sometimes it just keeps moving. So we'll have to wait and see on that. The MACD it's overbought, but it's got one of these formations. I don't have a name for it, but it's not your typical rounding off formation as you see here. Well, you have one, you don't have one here, but you have one here, you have one here. But this formation is more like this one, and you can see that we got that, and then we went down a little bit, and then we just continued higher. So it's looking more like that. I'm expecting it to go higher from here. Probably 35 was my target. I don't know if we'll run straight to 35 before we come back for a retest. But overall, it's a very strong breakout, and it looks like we may be looking at some capitulation by the shorts. A lot of people have speculated that the March contract that Harvey Argan has pointed out that the outstanding contracts are still near they're just below 60,000, and we're approaching the last day to roll over those contracts. What that means is that if you're going to take delivery, you have to, by a certain date, either put up all the money to pay for the total contract, which is roughly, I think it's $150,000 or something like that. You have to put up a lot of money, or you have to roll out to a further month. You have to sell this month and buy in a further out month. Now, what that does, if you do that, what that does is it extinguishes the contract of the existing month. And you can see that if I go out to the 2 hour, unfortunately the volume in this Netdania chart is missing for the past. The volume has, and that's why I've started using it, because the volume is now here. It wasn't there before. But you can see in this chart here a huge surge right here. Now, that volume is deceptive when you have the initial volume. It may be that this missing volume that I'm talking about here is just the contract wasn't trading. So what they do when they chart these is they're looking at the active month. The active month is going to be the nearest month that is still trading, which right now is March. So this volume here is probably everybody rolling into the March contract from the December contract. So you can't go just by that. In that way, volume can be deceptive. So, but anyway, the point is that when they roll into a new month, that extinguishes one contract. So, for example, let's say that I am long a contract for March silver, and I intend to stay long. So what I do is I roll it out to, say, June. Now, the way I would do that is I would sell one contract of March and buy one contract of June. What effect that would have is to extinguish one contract of open interest in March. And so what we're talking about here is the number of contracts that are extinguished as we approach the last date to roll over to the next month. And what Harvey Organ is pointing out is that a large number appear to be set to take delivery. And the rumors are that there's only about 100 million ounces on the COMEX. And if that's the case, and you have however many thousands, I think someone said it was even 20,000 contracts would be enough. Is 20,000 is 100 million? I think 20,000 100 million. So if anything more than 20,000 stood for delivery in March, you're looking at a potential default situation on the COMEX. So that's why we watch the open interest so closely on the March contract. We're down to roughly a week left, and we'll have to wait and see how many contracts are extinguished and rolled out to the next month and how many hold on and plan to take delivery. We'll know that in the next week or so. I wanted to point out a couple of articles. We had some pretty interesting news today with the things that happened in Wisconsin and in Ohio. In Wisconsin, this is the Drudge Report. I'll link this. There's a lot of news stories about this. The Democrats flee the State House. What we're seeing happen now is, I'd spoken about this some in the past, about how you're going to see a clash between taxpayers and government workers. And due to the recession, the downsizing that's occurred in the private sector has caused the wages and benefits of private sector workers who pay the wages and benefits of public sector workers to decrease so much that they're so out of balance that a backlash is inevitable. And that's what's occurring. It's happening in Wisconsin. It's happening in Ohio. It's going to be happening all over the nation. And as I've warned in the past, if you get your money from the government, whether it be welfare, unemployment, or you're a government worker, it really doesn't matter. If your check that you collect every month, whether it's a pension, it doesn't matter what it is, Social Security, welfare, I'm not comparing these things on a moral basis. I'm just pointing out the fact that if your check is written by the government, it's going to be cut because the government is broke. Not only is the federal government broke, but state governments are broke, county governments are broke, city governments are broke, all governments are broke. And if your money comes from the government, you're going to get cut. It's inevitable. And as I predicted before, the rioting, I believe there will be rioting, and the rioting is going to be people who are feeding at the public trough. They're the ones that are going to riot because they're the ones that are going to get cut. So it's in your interest to plan ahead, plan now, to not count on money that comes from government because it's not going to be there. And we're just seeing the beginnings of it. This is just the beginnings. It's going to get much worse. And we're going to see a lot more states. I'm really surprised we didn't see it start in California or Illinois. But I think that the overwhelming election of conservatives in the states of Ohio and Wisconsin caused the issue to come up first there. California elected a bunch of liberals, and they're just going on with Governor Brown has talked about it, but they're just going on and spending, just like Obama and his budget, just spend. We don't even see any cuts. So that's going to be some interesting stories to follow. I wanted to take you real quick to coinflation.com. It's a website that tracks the metal value of the denominations of U.S. coinage, and the one that we've been following real close is the nickel. And I believe we're reaching very close to an inflection point. The nickel is already at 146% metal value to face. So that means every nickel's worth 7.3 cents. Now, it's going to get to the point where they're going to have to pull them. According to Gresham's law, bad money chases out good. This nickel is good money, and there's not too many deals where you can go down and make a 23% profit in an instant. So there's probably not going to be much time left to go down and buy nickels. I know it's they're bulky and everything else, but we're probably looking at a scenario where you could just double your money. Now, when this happened with silver in the 1960s, it was, and they have passed a law recently that you can't, it's illegal to melt these. It's also illegal to take them out of the country in any amount larger than $100 or something like that. But historically, if you look back in the 60s, what happened was, although they outlawed it, the melting of those coins, as soon as those coins were gone, they made it legal again. And people have asked, well, why would they do that? Well, it's they want to get rid of them. The existence of these coins is an indication of how bankrupt and how terrible of a policy the government's following in regards to inflation. The very existence of this coin and its value is a testimony to their profligate ways. So you probably will see the same thing that you saw in the 1960s. It's illegal now to melt them, but they will be hoarded, then they will be taken out of circulation, and then it will become legal to melt them, and you'll just be able to sell them. Or you can just sell them as they are. You don't need to melt them. So that's what I expect with the nickel. Keep an eye on it. I don't think we're too far away from a nickel being worth 10 cents. And I think when we hit that, that's an inflection point, and I think the government's going to pull them. They'll probably pull both the nickel and the penny. Now, the penny, you've got to remember that the composition of the penny was changed. The composition of the nickel has never been changed. This coin is 75% copper, 25% nickel, and it has been since 1940, whenever the war nickels, 47. And then before that, even all the way through the Buffalo nickels. There were 3 years where they were silver, but otherwise, the composition of this coin, this is the one coin the composition has never changed. Now, this coin here, 1982 and prior, was 95% copper. Now it's three times, and those have pretty much been driven out. You can still find them, and if you're interested in it, you can go and look up the Rydale penny sorter. And there's some other penny sorters out there that will actually sort pre-1982 95% copper from the zinc ones. These are the zinc ones here, and if you notice, they're 67% of face. So they're approaching, and if zinc continues to rise, these are going to reach 1-to-1. So I think we're going to see a point where the government just simply eliminates the penny and the nickel completely, and they're gone. And then at that point, once they're all gone, then they'll probably be able to sell them, and they'll no longer be coinage, and defacing them is not going to be an issue. So I think we're running out of time. You might want to stock up on those if you get the chance. One thing I wanted to point out about silver, this is a coin that I, when we had the drop to $25, this is a coin that I recommended. That was right in here, and at that point they were on Gainesville for, the price was $25, and you could get them on Gainesville for $30, and I recommended buying those. And you can see now on APMEX that they're going for 42 bucks. So that's a gain of $12. The price of silver's gained about 6.5, and they've gained twice as much. So there's a little numismatic play if you're interested in that sort of thing. I really like them. I like to play that type of a deal because, for one thing, the higher the artistic value of the coin, the much less likely it is to be counterfeited in the future. Also, the rarity of the mintage being so low. I think they're 300,000. They're a lot of them are limited, very low mintage. The numismatic value, I like to have, if I can have silver and numismatic and not really have to pay any extra or much extra for the numismatic value, I like to have that there as well. So I like that play. The koala was another one that I really liked, and you can see one that I recommended was, well, these early ones. The 2007 is very rare. You can see it's $90 now. And the 2009 was one that I bought some of, and it was $14, I think, when I bought it. It's now up to $44, and I think it's around 300,000 as well. I don't think they have too many of these, but I just wanted to point that out because the one that I'm recommending right now that I think is a great deal, that if any of you are looking at buying right now, and it's hard to buy right now, and one of the things that makes it easy to buy is when the premiums are compressed. And this coin right here, I think this Wolf, it's a low mintage, and its premium is very compressed right now. It's never really been much cheaper than this because it's always had a high premium, but as the price of silver rises, the premium is compressing a little bit. There's still quite a few of these. You can see there's 3276 of them, and you can get them for about $36. That's $4 over. It meets all the criteria for me that I have used in the past for the other coins that I selected. It's a beautiful coin. It's unique. It's low mintage, and the premium is compressing on it. And you've got quite a few available still at APMEX. I think if you're looking to buy right now, if you think we're in a breakout and we're just going to keep running, this is a fantastic coin to buy. And I don't think you're going to lose. I think even if we had silver crash down to $20, I'd be willing to bet that these will still go in the 30s. You probably won't even lose anything, even if silver is cut by 12 bucks or so. So this is one I highly recommend. I don't think there are many out there. I think they're going to go quick. So if you have some spare cash, you should think about stocking up on this one. So we're going to watch it tonight. Looks very strong. I'm expecting a run to 35, but we might not make it before we come back and test. We'll just have to wait and see, and I'll talk to you next time.